Insmed just delivered a massive beat for Q2 2026. They completely crushed consensus. Revenue came in at $425.5 million. And EPS, we were all bracing for a heavy 69-cent loss, but they practically broke even at just a 6-cent deficit.
Yeah, and right out of the gate, management bumped full-year Brensocatib guidance to at least $1.25 billion. So, I mean, no surprise the stock just exploded. It was up 34% on the day.
Right, 34%. That kind of violent upside repricing demands an immediate look under the hood. So for you listening, the mission of this deep dive is to dissect these mechanics. Like, what is actually driving this top-line explosion?
Well, the sheer magnitude of the jump comes almost entirely from Brensocatib. That's their lung disease drug, right? We're talking $309.2 million this quarter alone.
Wow, just in one quarter.
Exactly. It's a massive 49% sequential leap. And this is just its third full quarter. Meanwhile, their legacy drug, Eric Casey, is just doing its job, adding a steady $116.3 million.
Up 8% year over year, I think.
Yeah.
But the real story here, the thing hiding behind those top-line numbers, has to be the margin expansion.
Oh, totally. Their cost of product revenues just plummeted. It was 26% of revenue last year, and now it's down to just 16%.
So that leaves them with, what, an 81.8% gross margin?
Right, 81.8%.
I mean, you see an 81% gross margin and you think you're looking at a high-flying SaaS company, right? Not a biotech manufacturer. This is a perfect example of how biotech margins just scale exponentially once the drug hits the market.
Yeah, once those fixed costs are covered, the cash just drops straight to the bottom line.
But wait, I have to ask. A 49% revenue jump quarter over quarter. That almost sounds like a mirage to me. Like, are we sure we aren't just seeing a temporary backlog of pent-up patients finally getting their prescriptions?
That is the exact suspicion management tackled on the call. They explicitly stated that all 7,000 new Brensocatib patient starts this quarter were pure organic demand.
Wait, really? None of it was a deferred backlog?
None of it. The medical community is just actively adopting it. And they're so confident in this underlying momentum that they actually bumped their peak sales estimates for their 3 lead assets to over $13 billion.
$14 billion. That is wild.
Yeah, and they reiterated their plan to hit positive cash flow by 2027 completely without raising new equity.
Okay, hitting positive cash flow without dilution sounds great, but let's push back on that 2027 timeline for a second. If you look at the actual cash burn, their operating activities chewed through over $311 million just in the first half of the year alone.
Right. The SG&A costs are definitely something to watch.
Exactly. Selling, general, and administrative expenses spiked 60% year over year to $247.5 million. Sustaining an 81% gross margin clearly requires burning massive amounts of cash to support the launch and acquire those patients.
Yeah, when a company becomes this highly reliant on a single asset's momentum, that execution risk is huge. The rapid gross margin expansion gives them a nice buffer, sure, but operating leverage only works if physician adoption keeps pace with that spending. Plus, management flags some issues abroad. European budget constraints are making traditional commercial launches over there look a lot less attractive right now.
Which makes the U.S. launch even more critical. You can't model linear revenue growth forever when your expenses are climbing by 60% in a single quarter.
Absolutely.
If Brensocatib sales plateaued even slightly, those surging SG&A costs could instantly derail that 2027 cash flow target.
Which brings up the crucial catalyst beyond the U.S. market. While Wall Street is hyper-fixated on the domestic launch, you really need to keep your eyes on Japan. There's a pending regulatory decision later this year.
Right. A green light there sets up this highly lucrative dual launch scenario in 2027. We'd be looking at Brensocatib paired with an Eric Casey label expansion. If they navigate Japan successfully, it could totally validate those 14 billion peak sales estimates.
And provide the global revenue base they actually need to outrun their current cash burn. It's going to be the ultimate test of whether these biotech margins can scale globally without breaking the balance sheet.
Spot on. Make sure you follow the show for your daily earnings deep dives so we can keep tracking these crucial catalysts together.